Hi guys, today's video will be an overview on the current situation on the stock market. But apart from discussing the particular companies, I think it is also a good moment to talk about the current situation with US spending limit and potential USA bankruptcy. Because naturally, the mainstream media are spreading some panic, not explaining the topic fully, to of course get attention and clicks. So let's start from the beginning. The US spending budget limit was introduced in 1917, so we can see that it is a relic of the past. Secondly, since then it was raised or halted more than 110 times, so that itself should say something about the importance of it. Third, it wasn't even deeply analyzed what level should be set to correctly address the current problem, which was at the time, we all know, the First World War. So it was a completely arbitrary what kind of number they should introduce to this law. As for the bankruptcy, what does it mean? Well, it means, in a nutshell, the entity is no longer able to pay interest or interest with principal on their debt. So let's go further, and I will not dwell into government finances, of course. Just in a big summary, we must know that even if the Congress will not raise the limit, which is unprecedented, government will have only money from taxes, which is in monthly term more than 350 billion of US dollars. Of course, US billions. And monthly interest is around 47 billion US dollars. So you can see that even if it would happen, they would need to make some cuts in spending naturally, but that would not mean bankruptcy. And on top of that, the raising limit doesn't mean that the debt will rise along with it. They need to have a space to issue new bonds to pay for the previous ones. So kind of a rollover of the credit. And probably you're also asking yourself why they are spending more than they are making. And the simplest answer for that is that the US companies are taking a lot of debt because they have a very high return on the capital. The US businesses has the highest margins, so that they can afford to take more and more loans. We talked about that more or less in the previous video when we discussed, for example, Facebook, or the video where I talk about my portfolio for this month. So you can check those videos also. To let you know that all the gibberish is just to cause, a panic, some kind of emotions. And if you could study the past, any government hold didn't cause the bear market. And what is a bear market and what is a correction, we also discussed previously. So let's also talk about Facebook briefly. As we talked about the last week, so let's make just sort of an update. And what we see? Naturally, the whistleblower was testifying in front of Congress, but it doesn't look that serious as the media was talking about. Yes, they are trying to put more regulations on the company to, for example, give access to their algorithms. But there is nothing in this case that signal any major change in business model, which could lead eventually to drop in revenue or profit. And those fundamentals we discussed previously as well, that Facebook is one of the companies with the highest margin. And right now, they are traded at $320 at the time I'm recording this video. So, okay, let's move further and to talk about the current situation on some other companies, like Jpmorgan Chase, which is set to report their third quarter financial results before they open on Wednesday, October 13th. So, current consensus for third quarter is expecting $3 in EPS earnings per share and 29.79 billion in revenue, for expected year-on-year growth of 3% and flat respectively. So JPM's revenue declined 8% year-on-year in second quarter, while EPS rose 174%. What's interesting is that the $3 in EPS earnings per share and the 29.79 are higher than the original estimates for the third quarter shortly after the July earnings report. So there has been a drift higher in the quarterly estimates. So the company is well valued right now, trading at 2 times tangible book, although the positive revision trend in JPM's EPS and revenue estimates is very encouraging. On top of that, the interest rate hike is coming in the long term, so Good times are ahead of financials. For calendar 2021, JPM is expected to grow earnings per share by 59% this year, while revenue is expected to be up 2%. In calendar 2022, the current consensus is expected 0% of revenue growth and a 60% decline in earnings per share. Hence, it's worth watching the 2022 EPS and revenue revisions. As for the trade ideas themselves, apart of course from buying and holding, I would wait for Wednesday, how the market will react after publication of earnings. There is a risk of some pullback at this moment, and it is too late to enter on buy position for a short scalp. So, next, Bank of America. Stock is still trading about $10 below its 2007 high near $55 per share and is expected to report their third quarter earnings on the 2021 on Thursday morning, it depends on your time zone, but Thursday before the opening bell. Consensus shows that Bank of America is set to report $0.71 in earnings per share and 21.7 billion in revenue, for expected year-on-year growth of 39% and 7% respectively. For calendar year 2021, Bank of America is expected to see 88% earnings per share growth and 3% revenue growth, while for 2022, 1% in EPS and 6% in revenue growth, of course. So, again, let's watch the 2022 numbers and how they get revised after the third quarter of 2021 earnings. Bank of America recently raised the dividend from 0.18 to 0.21 per quarter. The share repurchase in the second quarter was 4.2 billion. So another thing that we need to mention is that at $44 per share, the Bank of America, BAC, is trading over 2 times a tangible book of $21 per share. The stock is fully valued here at this level of $44, and while the credit losses continue to decline sharply, as the job market remains very healthy and the unemployment rate fell below 5% on Friday, October 8th, I think we can have high hopes for financials and particularly for this company. So as for the charts and potential entry, the same scenario as with the Jpmorgan. There was a bit of growth in price recently, so I would wait until Thursday, to make some decisions whether to join the upside or to the downside. So summarizing everything, a lot of companies are publishing their quarterly earnings this week, and if we could focus on the financials like Bank of America, certainly the fundamentals as the improving credit losses certainly looks favorable from 3 to 6 months out from here. And as for the taper, I think it will actually benefit the banks. Naturally, I do not want to bore you and make this video too long. So that will be all for this video. Thanks for watching and we'll see you next time. Take care. Bye.